What's up with Render? It gave us a 30% pump within just a couple of days. Is the AI narrative back? And what can we expect in the short term? We will analyze that from different perspectives. For example, on-chain data like the transaction activity, you will see that it actually tells us a lot of things, but of course technical analysis as well. Because as always, if we listen to the charts, they will tell us a lot of surprising stories. So without any further ado, let's go. Welcome to another episode of Philprints, your one and only stop for crypto, finance and trading. In case you don't know about Render, this is a powerhouse of a project. In short, it's a distributed GPU rendering on the blockchain. This means it's a platform where you can rent out your GPU computing power to designers and VFX artists and so on. And Render is not just your usual startup, it's built and backed by very prominent names of the film industry. If you want to know more about what they're doing, their technology, and also things like tokenomics, make sure to watch my in-depth review about Render. You'll get a lot of answers. Now, if we have a look at the price chart, you can see that, as I teased in the intro, we had a 30% pump in the last 4 days. Also, we're right now touching the Philprints reversal bands, my indicator, which in this current sideways range gave us tops and bottoms pretty beautifully over and over again. So we now have to wait and see, is this another local top and we go down from here, or will we be able to establish here and finally flip this golden line here to support? Because as you can see here, Render, and this is a little bit different to other altcoins, is overshooting this golden line over and over. So it's giving us these kind of fake outs and not textbook retest like in this case here, at least most of the time. And at the moment we are overshooting here again, and the next couple of candles will tell us, is this another fake out or can we actually establish this as support? Now as you can see here, this line here, this small rectangle, which is also part of my indicator, indicates that there is a bigger momentum forming. And the last time we've seen these, we had extreme big reactions to the up and the downside. And in this case here, it actually marked the start of this downtrend. So this could mean that this time momentum is sufficient to shift the trend as well to the upside here, same as it did here to the downside. Of course, as long as we're not going higher than this here, we have consecutive lower highs over and over again, and this strengthens the downtrend. In case of a bearish continuation, I would personally look at the 0.618 measured from this upside move, which is right here. So this would take out the liquidity below these wicks. So something like that, for example, that would be a realistic possibility. Now let's have a look what on-chain data is telling us. But before that, please make sure to enter my Telegram group, which comes with one of my trading indicators and a 1-hour trading course that explains it and helps you to build your own strategy for free. I want my community to thrive. Secure your spot while it's still free. This may change for new members in the future. Link is down below. All right, so let's pull up my token demand analyzer tool and have a look at new wallets and transaction activity first. Within the last 30 days, you can see that we had a new high here in new wallets created. For reference, this box here is the last 30 days. And on May 1st, we have this spike here. So this means right here, exactly at this local bottom. Now with the transaction activity, it actually gets even more interesting. We also have kind of a spike here on May 1st, but we have some spikes here as well on April 23rd, which is right here at this local top. And then another consecutive spikes on April 12th, April 13th, April 14th, and April 15th. And this is exactly here. April 12th, April 13th, April 14th, and April 15th. This is just beautiful. So that means transaction activity is able to tell us where local bottoms and tops might be. And potentially the creation of new wallets on May 1st, similar here to my momentum signal, could indicate that this rally is different from these prior rallies, meaning a potential higher likelihood of follow through. All right, let's continue with our holders, meaning plankton wallets and whale wallets, as it's really interesting how the behavior between small and big holders oftentimes differentiated and make for some kind of divergence. These plankton wallets have a minimum token balance of 100 tokens, and this means with Render being around $9 a token, these wallets have around $900 in the wallet. And for the whale wallets, this is 100,000 tokens, so $900,000. Now the small wallets, the plankton wallets, pretty much have a gradual rise. So basically they're not selling off, they're only accumulating. Whale wallets on the other hand, and this is pretty usual for them, you can see it's not as gradual and it looks very fizzy. And this is because over and over again, they are reconsidering their investments. Does it make sense in the current market conditions? Whereas plankton wallets, retail, just buys, accumulates, holds, waits. Now from April 2022 until around end of January 2023, whales didn't do any real accumulation. So this means from here to around here. Which is interesting because these were the best prices to accumulate. But whales don't try to catch bottoms, they're trying to hop on powerful trends with the lowest possible risk and very good upside potential. So in short, they're only interested in selling higher than they've bought. As you can see here, after this period, we had this retest, which confirmed a new uptrend. So this is February to March 2023, and this is where accumulation of whales started to get vertical until around July 2023. From there on, it's basically flat again. That means to around this point, before this parabola started. So whales built their bags on this period and they're riding the trend ever since. Now, if you ask yourself what this pump and dump here is, I am not 100% sure, but I suspect this is due to the Solana migration. So this is end of October 2023. And as you can see, this is exactly when Render Network migrated to Solana from Ethereum. Then on the hourly chart of the plankton wallets and the whale wallets, you can see that in the last 30 days, still retail was accumulating like crazy, but whales sold off a little into retail and now recently also started to accumulate a little again. So altogether, what this tells me is that Render is really retail driven. This is genuine interest in the project. This is genuine price action. Not at all looks like manipulation to me. And also whales not selling off for a long time shows that they have continued interest and believe that Render will still perform good in the future. If you have not subscribed to this channel yet, please ask yourself why and do it now. You really don't want to miss any of the next videos. This was Phil Prince for you. Until next time, crush the markets. Goodbye.